can do all the checks you want, but sometimes things go south.
Most think they're investing, but they're actually operating.
Before you developed systems and scale that just came over time, what were some of the key lessons that you learned that really stood out?
We didn't really have systems in place, so everything was done manually through Excel spreadsheets, individual invoices. Some of the repairs and maintenance we were even doing ourselves. Some landlords, so they're wasting their evening time away from family because the landlord's here trying to fix a plumbing issue and makes 2 or 3 trips back and forth to Home Depot.
They want their money working for them, and they end up with the second job.
These landlords, they need to learn at a certain point, you need to treat it like a business, because again, at a certain point, it's not feasible for you to be doing absolutely everything in the business. So there's definitely ways to help improve your systems so that you can actively grow.
Everyone sees the door count. Most don't see the systems.
You can do all the checks you want, but sometimes things go south.
There's a moment in real estate when you realize this isn't passive, it's personal. And if you don't build systems, this thing will bury you. Garnet didn't start with leverage or scale or strategy. He started with tenants, repairs, mistakes. What I took from him wasn't a tactic, it was a mindset. But in between those stories are systems, frameworks, the kind you only learn the hard way. Garnet Coria manages over 600 doors. And what he's built can teach any investor how to stay in control. Let's get into it.
So Garnet, tell me, what pulled you into real estate and how did that evolve into managing over 600 units?
For sure. So when I graduated from finance, I had a job that started at a collection agency. So that collection agency downtown, we was servicing here in Edmonton. We worked with lots of individual landlords and then large scale landlords as well. So, commercial towers and things like that. So through that aspect of dealing with a lot of, bad tenants, we kind of found, what certain things to look for, but also the types of information that are valuable for you to collect as a landlord to prevent and at least, mitigate your risk a little bit as to what information you need so that if there is an issue, how you can go in about enforcing and collecting those funds ultimately.
Got it. So you were exposed to this and you thought, well, you know what? I've learned a ton. I've built up these skill sets. Let's put it to use and start helping investors. Now, at that stage, had you already gotten into rental properties yourself? What did that look like?
Yeah, so in 2016, my wife and I bought our first house and just put a basement suite in it. So we were kind of house hacking.
Yeah.
So I had a tenant down there for 4 or 5 years, and then during that time, we started building our portfolio. And as I got involved, I was working obviously with collection agencies still, but then we're also kind of growing our management portfolio with my current business partner. And then I was able to go full time in about I think it was 2019 is when we decided to go full time. So she was still working with the collection agency, and then I was able to go full time on the management side of things.
Got it. Okay. So that makes sense. So you were investing yourself, you were building a skill on the side, and you were working with bad tenants. You were sort of seeing what those red flags look like, what to spot. And I think it's sometimes more important to know what a potential bad tenant looks like than necessarily what the good tenant looks like, because you could spot those red flags. Now, when you were getting started, what were, before you developed systems and scale that just came over time, what were some of the key lessons that you learned that really stood out?
So, in the beginning, obviously, systems are very important, but as we were small and starting to grow, we didn't really have systems in place. So everything was done, manually through, Excel spreadsheets. You're creating individual invoices. Nothing was automized. And, we were doing everything from, the photos, the advertising, the showings. We were doing everything. Some of the repairs and maintenance we were even doing ourselves too, just to help, keep costs, but also generate a little bit of income for us as well at the beginning. But of course, as you grow, your team has to grow with you, right? So now we've got an awesome team of trades in every industry to help us service our current clients. So yeah, it's been a fun ride.
And when you first got started, since you had some of this experience though, were you thinking about things like tenant profile, turnover, versus how you sort of look at things now with all the years of experience that you have?
Yeah, for sure. important thing obviously is meeting the person in person during the showings. I mean, that's one thing, but also once you meet someone, I mean, again, you can have a great interaction with somebody, but that application is really, you know, what the information that's provided on there is what's going to help back up how your gut feeling is about that person. I guess generally, and again, I mean, we're not perfect. I
Yeah.
mean, you can do all the checks you want, but sometimes, you know, something in their personal life maybe has happened, and you know, there's just a split in the relationship, and now things go south. So
100%.
it is really hard, you know, to dictate things that go on in tenants' personal lives. But yeah, just making sure you're doing all those checks. You know, you've met the person, you've kind of got what your gut feeling is about. Generally, that gut feeling usually is right most of the time. You know, sometimes the ones where we're kind of unsure or you know, on the fence about once we go through the application, maybe, you know, if I've pulled credit, things like that, that will help us dictate, you know, yeah, this isn't really a good fit. Or again, this is a conversation we have with the landlord and the owner saying, you know, here's the situation. You know, we've been in the market for a month. This is kind of because of the location and the tenant profile for this area. This is kind of maybe just the type of tenant that we're going to get, and then here's kind of the risk with it. But you know, here's what we found with these people, and we think these might be a good fit for your property, right? So that's a
100%.
conversation that we have with the owners in a case where, yeah, we're kind of on the fence about it, and you know, we'll kind of leave it up to them to decide. But we want to provide them as much information as we can, and our you know, our 2 cents on it and recommendations. But ultimately, it is the owner's property. You know, they're paying the mortgage, so I mean, again, sometimes they've got to make a decisions that, you know, there's no lapse in rent, or you know, there's just these vacancies that have to be filled after a few months, right? So
No, that makes sense. And I want to dive a little bit deeper into that. But before we go there, I think, you know, one of the crucial first steps that you need to understand when you get into being a landlord is that it, like, a lot of it starts with, like, you know, before you get the property, right? It's understanding the tenant profile that you're ideally looking for, because that would dictate the location, that would dictate the property type, all of those things. For people just getting into it, like, how can they help navigate those initial steps so that they help set themselves up for success?
for sure, I think the first thing that you need to be doing is working with a investor-focused realtor that
Yeah.
really understands areas and what comes with those areas. But often that investor-focused realtor, you know, they might not, they'll understand areas and values, and you know, where the market's been the last 5 or 10 years. If it's been pretty stagnant, or if they've seen appreciation in that area,
Yeah.
they might not have the knowledge in regards to exactly what the rents might be. They may generally be, but again, at least they should be able to connect you with, you know, someone like myself or maybe another management company,
Yes.
and maybe help you with navigate some of that so that you can kind of get an idea for market rents and things like that. Because like you said, the location is really going to dictate what your tenant profile is, right? I mean, again, some owners, I've got some clients that only buy in C and D areas because the cash flow is better there. There's obviously some risk with that because, again, every couple of years you might have to deal with, you know, one bad tenant or something like that, or every 5 years it might be one bad tenant where they get behind on rent and you got to go the eviction route. But again, their goal is cash flow, so they find that the cash flow usually ends up being those C or D areas versus being, you know, in maybe an A or B area where cash flow is a little bit less. But again, you have better tenant profile, maybe a little bit better appreciation as well. So it just is really dependent on what you're after as an investor and what your goals are. So again, having an investor focused realtor and someone that they can connect you with, you know, other trades or other industry professionals, whether it is mortgage brokers, accountants, and obviously property managers, things like that, to help pull and give you good sound advice.
Yeah.
I think that's really valuable.
100%. I couldn't agree more on that. You know, there's been so many times where I've had an investor reach out to me, and maybe they're having issues with a property that they have. And more than often, it tends to be out of province investors, and
Yep.
they weren't educated when they got into the property on what the location's like, you know, what the tenant profile is going to be. And I think they get hyped up by this property that shows really well on a pro forma, but they don't fully understand the neighborhood. They don't fully understand that it's going to be more management intensive, that there's going to be more turnover, there's going to be more
Yep.
damages, it's going to be vacant for longer, stuff like that. And then you kind of have to do damage control. It more than often happens when they work with someone who's probably not investor focused, or, you know, not too clued up on that side. So I fully agree with you, and I've sent people your way where we've done our initial due diligence, and it's one of those where it makes sense to reach out to the professional who's dealing with this on a day-to-day basis, and they're doing it at scale, so they have more data points to be able to point you in the right direction.
I mean, like you said, I think it's important though to start that process and have a conversation early, because this happens all the time where
Yeah.
a client's already removed conditions, they're closing on a property, and then now they're calling us now for their advice, and then when they call us saying, oh yeah, here's what the bank or the appraiser said I can get for rent. So it's like, okay, yeah, my rents are whatever, call it $2,000 a month, but in reality, market on that might actually be in the $1,800 to $1,900 range. So that does affect your cash flow, of course, right? So yeah, really making sure you start that process early, have those conversations with some professionals who can kind of get some good sound advice, and at least then you've got some good conservative numbers. Because I find sometimes when these appraisals come back, the market rents on these, they're at the very top end. And then again, sometimes we do get those market rents, but in other situations, depending on what area of the city you're in, we'll maybe touch on this a little bit later in regards to a lot of these new infill projects and Aplex and things like that, and what we're actually seeing in the Edmonton market right now. But yeah, that's my concern is, again, all these appraisals are a very premium rent. And again, sometimes you can achieve those, but it is dependent on what area you're in and how much competition there is with other projects too.
100%. Supply and demand is a big factor
Yes.
that you can't be overlooking. Now, yes, I definitely want to dial into that. I also want to dial into just what you've seen with, the properties that you've been managing, or your experiences over the years with regards to properties that cash flow really well on paper, pro forma wise.
Yep.
And then what you won't see behind the scenes, because the pro forma is a snapshot in like one point in time, but you won't see behind the scenes is the tenant turnover, the vacancy, all of those other things, and how it kind of stacks up to a property that might be in a better location, better tenant profile, better property type, have lower, when I say better property type, I mean, it really depends on you, but have lower vacancies, lower turnover, how they sort of compare and potentially could balance out. But we'll leave that for a little bit further down the episode. Now, you've seen hundreds of tenant relationships play out, and you've had this experience before you grew and scale your property management company. What do long-term, low-maintenance tenants tend to have in common?
I mean, for long-term tenants, I mean, all at the end of the day, all they want someone that's going to respond and take care of when they have that
Yeah.
one or two issues, when whether it is once a year kind of thing, they have a phone call or a maintenance request. They just want to ensure that they're heard and that things are dealt with,
Yes.
quickly and efficiently, right? And that sometimes we see it where, we've taken over management from, let's say a client has just purchased a new a building. We're inheriting existing tenants. And, the number one thing we hear all the time is, oh yeah, I know I told landlord about this and never fixed it. Right. That's what you always hear that. So yeah, again, whether you're self-managing or you are using another or management company, I find that communication with the tenants and just dealing with their issues is the number one complaint. Like there's a breakdown in communication somewhere. Or the issue that we see pretty frequently is the self-managing landlords. They try and do the work themselves, but it's not done professionally. And, then you end up, the tenants are wasting more time because they now got to, come home during the day, or they're wasting their evening time away from family because, the landlord's here trying to fix a plumbing issue and makes 2 or 3 trips back and forth to Home Depot. And it's like, you could have just hired a plumber. That's a cost of business. Like, some of these landlords, they need to learn at a certain point, you need to treat it like a business. That's a cost, that's an expense to you. You expect the tenants to pay rent and be a good professional tenant, so you as a landlord need to act professionally as well. So I'd say, that's just a cost of business. Make sure you're doing things properly and have a good team. Again, that comes back to, not even just your realtor, mortgage broker, property manager, but again, you have a good team of plumbers, electrician, handyman. You can call them when you need stuff like that too, right? And just make sure things are done properly. Because ultimately, if it's not done properly, it's going to cost you more money in the long run, right? Now you got to deal with, water leaks and things like that too.
Yeah, I appreciate the fact that you brought that up, because it's so easy to just have your own perspective on it and not see the other side of the equation. And good tenants want good landlords. You know, if you have
Mm-hmm.
a good tenant and you're not playing your part, they're not going to last long. So, you know, like attracts like, and yeah, so you need to play your part. I absolutely get that. So let's say someone is like, hey, you know what, Garnet, I completely agree with all of that. I treat my rental properties like a business. I'm not here to go and be fixing things. I outsource all of that. I take care
Yep.
of the properties. I make sure that, you know, we're not delaying any repairs or anything that needs to be done. What else could I look for with that first interaction that that makes it a little bit more challenging to really predict what our experience is going to look like going forward? And of course, as you mentioned, there are these things that pop up, right? Everyone has things that unexpectedly pop up in their life, and things go sideways, and you can't really predict that. But that aside, having done this time and time again, what are some commonalities you see where you've done the screening, you're like, you know what, these are good tenants, and then you actually see the management prove you right down the road? You're
Yep.
like, yep, I could tell. I'm sure you've seen patterns within that, right?
Yes. Yeah. I mean, it's important. Like I said, that's why again, that initial interaction with the tenant at the showing when you meet them, you really want to understand why they're moving. You know what their family makeup is. If they've got a spouse, if it's just themselves, if it's a family that's moving in, what their situation is, and you know what they're looking for. And again, that's a question often we ask during our showings. You know, ultimately, you know, again, we usually only sign 1 year leases, and again,
Yeah.
there's no guarantees that someone might say, "Oh yeah, I want to be here forever," and again, work situations change or something changes, they won't want to stay, of course, but it just gives us a good sense of, you know, where they're at in life and what they're looking for. But again, I find, you know, young couples or young families, like those ones often, you know, once their roots are down, like the generally a turnover 2 to 3 years, I'd say, is as on average for a lot of our suites. Again, basement suites, we often see a little bit more turnover, especially
Yeah.
if it's like a one bed, because you know they get a girlfriend or a boyfriend. It's just not enough room for them to accommodate, or they just want to get out of the basement living and not have a neighbor above them anymore. So we probably see a little bit more turnover in those type of style units. But yeah, like our townhouses, main floor, and then just a standalone single family house, we generally, I'd say the average is 2 to 3 years that tenants stay, and then at a certain point they make a decision that it just doesn't fit their needs anymore. Or, you know, unfortunately, we find a lot of the good tenants end up leaving because they make the jump into home ownership, right? So those,
Yes.
you know, which is a good thing, but yeah, it's unfortunate when you do lose those good ones to home ownership.
100%, 100%. Yeah, that's. I love that you also mentioned the fact, because the bedrooms also make a big difference, right?
Mhm.
If you have a property that's more of like a transition type property where it's so easy for someone to outgrow that space, well, then your longevity is going to be a lot shorter. You know, your tenants are going to be able to quickly outgrow that space. So 1 bedroom versus a 2 bedroom or 3 bedroom,
For
right?
sure. Yeah. I mean, I always like to see, you know, a 2 bedroom basement suite over a 1 bedroom. But again, it's a double-edged sword because, of course, the affordability on the one beds are a little bit better. So sometimes they are a little bit easier for people to come and go and rent. Whereas with, the 2 bedrooms are going to be obviously a little bit more money. But now you can get into a space where, you know, maybe you do have a couple in there, or it is maybe just a single person, but now they've got their own office space and, you know, that second bedroom. And again, just a little bit more room. And we find that, you know, those people end up staying a little bit longer term.
Got it. Got it. And I take it, even in that case, then you're trying to fit it for the correct tenant profile so that you can get a little bit more longevity
For
from
sure.
them,
Yeah.
right?
Like for us, like I'm not going to put, you know, a single student for say underneath a young family that's living on the main floor or something like that. And
Yeah.
often, you know, that isn't really you know, a family makeup that we want living up and down like that.
Yeah.
Um, so again, it comes down to just making sure you really understand the tenant's profile, their lifestyle, who the family makeup is, and you know how you can kind of mash those two together.
Got it. Got it. Okay. So for all people listening out there, they're like, okay, I need to be a good landlord. I need to treat this like a business. I need to be a professional at what I'm doing.
That's right.
And secondly is start with the tenant profile in mind, and, you know, put a good power team together that can help support me for all the unknown blind spots that, you know, I'm just not aware of. Now, what is something that you notice with regards to like a unit feature or location factor, you know, that landlords may underestimate, but, you know, keeps tenants around longer or makes the rental unit a lot more attractive when you're trying to get it rented out?
Yeah. I mean, I know there's going to be some, I'm going to get a little backlash about this, but there are going to be some landlords out there that have always done it this way. Just from our experience with 600 doors, when we get into those suited houses, I find separating the garage units and renting those out separately really does, it reduces your tenant profile a little bit, because again, the people that don't have a use of a garage, maybe don't have vehicles, like it's just a lower tenant profile.
Yes.
But I find the whole reason that a lot of people go to and opt to rent a main floor is because they want affordability. They can't afford a whole house, but they still want all the amenities that a single family house will offer. So they want the garage space, they want a backyard space that they can, enjoy and maybe have a family grow into. But yeah, I just find it is a different tenant profile when you don't have a garage that goes with the main floor suite. And again, some tenants might just opt not to rent it. And again, that's maybe why you've decided to rent it out separately and they don't want to pay extra for it or something like that. But generally, I like to just have the garage goes with the main floor, because we usually make them responsible for the lawn and snow maintenance. They have a place to store stuff, because that's another issue now. They don't have a garage space. So where are you putting the lawnmower and, snow blower and shovels and all that stuff and storing it, right? Like I find those tenants don't take care of the property as well when you don't have a garage that goes with the main floor. And that's kind of what we've just seen from experience. Again, I've got other landlords that, some of our current clients, that they don't like doing it that way. They want to separate it out. So we just offer it, let's say for a double car garage, it's $250 or $300 a month. And if the main floor tenants don't want to pay that, then we just don't include it. But I find that it really does affect the rentability of it if you aren't including those garages with the main floor suite. So that's one thing. I would say just the parking and storage is one thing. I mean, again, Edmonton, we are trying to become a little bit more transit oriented, also with the LRT system and everything. We're probably still another 3 to 5 years from that. But like generally in Edmonton, like everybody has vehicles and we need those to get around here right now. So I find that parking and storage is a big thing when you're looking at houses. So personally, if I was buying a suited house, like I'd be looking for double car garages. I prefer to stay away from the single cars. And I'm sure you see that too. I mean, the value, even when you go to sell it for resale value, I'd say, the double is also a little bit easier to sell and a little bit more value there than just a single car garage.
100%. Yeah. I actually like the fact that you mentioned that, because yes, there's also the convenience factor of one is like storage, especially if it's a suite property, there's lack of storage, right? So having that garage there, if they want to park their vehicles there in the winter so that they don't have to, scrape the snow off every single time, there's a lot of convenience that comes with that. And, that convenience offsets, the turnover and the vacancies and stuff like that, because
and they like having the security of it, right? Like again, if people have tools and things like that, like again, it's a pain. If you get a full garage of stuff plus your house, like chances are you can keep them in your property longer, because it's not as easy for them to pack up and move all the stuff, and it is a hassle, right? So there are some tenants that choose just to stay longer, because I'm sure they just don't want the hassle of it, of having to move, every year or two, right? So again, if they're comfortable in their space, again, use the landlord or the management company is taking care of them and the repairs are taken care of, and they feel like they're getting good value for it. Like tenants don't want to move if they don't have to, generally, right? Like if they're happy where they're at, they'll continue paying the rent, as long as it's reasonable. But I also find that tenants are also more willing to take those rent increases when they know they're renting from a good landlord that's taking care of things. And as long as you're in line with market rents, like I find that again, generally like our rent increases range between $50 to $150 year to year. It just really depends on the type of property, whether it is a condo unit or a single family house or a townhouse. But generally I find the tenants understand with rising costs and everything around us, and they're more willing to take those rent increases, because again, there's no guarantee. They can go shop around, they might find something cheaper, but there's no guarantee that they're going to be renting from another landlord that's willing to take care of a property the way that maybe we manage it, or you as landlord are taking care of the property, right? So it is a gamble.
100%. No, I fully agree with that, because that's the thing, is if you're taking care of the tenant and it just purely comes down to them shopping, and even if you're at the top of the market rents, then there's other factors involved as well. It's the inconvenience of moving, it's the cost of moving, and then it's the risk of, is that landlord going to treat me as well as how I have it here, though? So I fully agree with that. Now tell me, when you walk into a unit, what signals tell you who your tenant will be? Now, I'm sure this comes like second nature to you because you do this all the time. But what signals tell you? Like, this is like before you've even listed the unit. Investor calls you up. They're like, hey, maybe they call you up ahead of time. They're doing their due diligence, and then you're like, you know what? This is what you can get for rent. Seems like a good property, and now they want to list the property with you, and you go view the property. What signals tell you who the
Yeah.
ideal tenant would be there?
Yeah, so for us, the number thing when we walk in is we want to make sure to checking for damage, like visible damage, where it's cosmetic stuff, holes in walls or doors and things like that, things that are functionally you can tell that are not operating well,
Yeah.
and cleanliness, because I mean that's the first thing when tenants walk in, they want to feel like, okay, this is a nice place and it's well taken care of. Because again, when you walk into some of these places and like again, some of these we have a certain standard of things that need to be done before we list. Probably similar to you, obviously, when you're listing a place. But
Yeah.
again, that will just help attract and kind of reduce your risk on taking on a bad tenant, because some of the bad tenants, they don't care. They see holes in the walls. It's like, oh, whatever, those holes were already here, and they'll create more holes, right? So yeah, making sure that just basic things where everything is operational. Blinds on windows, I like to see, rather than curtain rods or no blinds at all. I got some landlords that don't provide any window coverings, but then now tenants are tacking blankets or sheets to the windows. It's those are the type of tenants that you don't really want.
Yeah.
There's just, again, it's just a lower tenant profile, right? So there are little things like that, just making sure it's clean, well kept. And again, we don't require owners to do extensive renovations, but again, if we need to go in and paint 5 or 8 or 10 walls, like, again, we can do that for under $500, and then again, some professional clean for $200 or $300. Like that's what we want. And again, the nice thing about that is then that's our standard. So when the tenants move out, that's the standard we expect. And if it's not, then we've got the deposit to make the deductions, and we'll coordinate all that to ensure it's back at the same condition that they received the property in, right?
100%. Yeah, no, I agree with that, because a cleaning can make the world of a difference in how it shows and how it presents, right? The ROI on that is just it's a no-brainer. And the same with painting. It's that's just low-hanging fruit to significantly improve how the property shows, which means you're likely to attract better tenants. If the properties are not showing well, then you limit the amount or the caliber of tenant that you could be attracting. So yeah, I fully agree with that.
And again, for these rentals, we're going into these properties, we understand these are rentals. These are not, brand new show homes necessarily. Some against on the new construction obviously is, but some of these existing 60s, 70s style bungalows, we understand these are rentals that are purchased. So there's going to be, standard normal wear and tear, maybe little scuffs and things like that. But yeah, we're more so concerned with, physical damage. And again, just making sure the cleanliness is up to standard.
Gotcha. Now, going back to like earlier on, when you were first getting into this, was there ever a stage where you sort of potentially underestimated a property only to watch it like quietly outperform everything else? And if so, if there is something that comes to mind, what do you think made the difference?
Yeah, I mean, I would honestly say townhouses are the ones that have really been outperforming, I'd say, a lot of the other asset classes. I'd say even 3 to 4 years ago, like generally our townhouses range between 13 to maybe $1,500, somewhere in there.
Yeah.
Like now, I'd say it's probably pretty difficult to find any townhouses under $1,500. So that's kind of the base, I would say now. And we're looking at like the 1970 style townhouses, just with a single outdoor stall, 3-bed, 1.5 bath. Like those are, yeah. Again, I've got fully renovated ones that we just rented some in Mel Woods, and those are going for $1,975 now, right? And again, previous to us doing any of the renovations, we were always getting between $1,200 to $1,300 somewhere in there for an older unit. And again, when they were renovated, they're at 15, but now they literally jumped up almost $500 a month.
Yeah. No, 100%. And I think it hits that sweet spot too, right? It gives you, in some cases, because not all of them are fenced off, but it gives you a little bit of a yard if you have pets or kids or whatever you want, a little bit of closed door space. But the maintenance is a lot better than lawn care, depending on if the condo is handling, all of it. But still, even then, a lot less maintenance. But you have space, you have storage compared to like an apartment, So it's that middle ground sweet spot, and then you also have better privacy compared to like a suited property, less noise transfer from up and down than there is from.
Yeah, and I find with
side.
those townhouses too, like you usually just get long-term tenants that are in there, because again, the affordability is there too, where they're still reasonably priced in comparison to maybe the main floor suite might be a little bit more depending on where you are. And again, a single family also will be another, could be $200 to $400 a month on top of that, right? But like you said, the maintenance on them, often the condo boards take care of the lawn and snow maintenance. So tenants like that, there's just not a whole lot of upkeep that they have to worry about. Versus, going to a main floor suite. I mean, they have to take care of the lawn and snow maintenance, right? And they still have a neighbor below them. So there are, also some benefits to that. But again, the drawback to some of the townhouses, they don't come with garages sometimes, right? So again, that's what the tenants place value on that. Then again, a townhouse of the 70s style might not be for them. They might be looking at some of the newer construction stuff where they have the double attached garage townhouse styles. But again, the rents will be a little bit more than that.
100%. Yeah. The newer stuff you get in garages, but a lot of the older stuff, most of them are just
just outdoor surface stalls is all you're getting, right?
Yeah. No, 100%. Now tell me, now that's property type. If we were to look at location, what would you say is the difference between a location that could potentially look great on a map versus one that actually works over like the long term, over like a 10-year hold? And I ask this question especially for people who might not even be local to Edmonton, because people who live in Edmonton, they've been around, they could drive the neighborhood, they could get a good feel for it, but people investing from other provinces, they can't. So when they look on the map, that's all they're really looking at, and then they're looking at a pro forma or they're running their own numbers, so it becomes a little bit more challenging. But what do you notice the difference between a location that potentially looks good on the map versus one that actually works for like a 10-year hold?
I think it's also, you need to look at what's going around in that neighborhood, right? Like, is there a lot of new development that's going down, houses that are being knocked down?
Yeah.
I mean, we're seeing that right now in Edmonton. I'll see a lot on the West End right now where, these generally were always kind of C-class areas, I would say. And again, that's often why a lot of investors are out there right now, because again, the lots are a lot cheaper than, being in maybe a B or A area, of course. But yeah, with that comes, again, you still have a lot of development sites and development properties around those areas. So, you still might have a lower tenant profile mixed in with some of these higher tenant profile tenants and nicer buildings in these areas. So again, it is a long-term play because, again, eventually those types of tenants will be pushed out of those areas as there's new development that comes. So again, I do like those areas. Again, anywhere along the south of the river, where you're Bonnie Doon, King Edward. I love those areas. Again, those I would consider A areas. You're gonna be paying a lot more money for them, but I just find those ones I love because the depreciation's always there. Again, the cash flow might be a little bit tighter, but the tenant profile is just so good. Like, we rarely ever have any issues with those tenants there, and they just stay long term, because I find even if it is young students at the beginning, that's coming to Edmonton or living in Edmonton, that's all they really know. So they like that area and they do stay long term, even after school. They might change the asset class that they move into, but generally they like to stay in those areas because you've got good access to the ravines, you got shopping amenities, bars and restaurants and all that stuff.
Yeah, no, I fully get that. Another thing you mentioned was like, these areas undergoing, the sort of the transformation that you've seen a bunch of older properties and you're like, oh, there's a new infill, and then a bunch of older properties and there's a new infill, and you can see the transition happening. There's sometimes that opportunity where you could buy a property that's in rentable condition and you're like, okay, eventually this property is not going to be able to compete, but the price of the land's probably going to go up because it's an older property, likely. So then, it could be primed for redevelopment. So I could see some appreciation on the land itself.
Sure.
But there's a bunch of different strategies. And I like the fact that you mentioned some of those key A-class neighborhoods. In your personal opinion, there's many ways to do this. There's no right or wrong way. But in your personal opinion, seeing the back end of things, working with a broad range of property types, locations, from these new infills, the sixplexes, eightplexes, to just the older standard single family homes or suited homes, from your A-class neighborhoods to the D-class neighborhoods, or to those property types where they've made it a triplex or a rooming house. You've probably seen a huge spectrum from like your cash flow intensive to the properties that maybe just break even. Knowing all that all that you've done, what is your like ideal buy box look like for your own personal properties, having seen the behind the scenes? Because again, when you see in the pro forma, you're just seeing a snapshot in time. You're not seeing the performance of the property, but you have the insight of actually being able to see the performance of people's rental properties
Yep,
and what that looks like.
for sure. I mean, I alluded to it earlier. I touched on the townhouses. Like I love those because again, just it's you get good middle class families often that are in there renting. Affordability's there, just long term tenants. So again, your turnover is just a lot less in those types of properties. I've got lots of suited properties, suited houses I like, of course, too, because at least if it's vacant, you're not 100% vacant like you would be with a single unit, whether it's a townhouse or single family house. So at least you've got some income there to offset some of your costs.
Yeah.
Um, and yeah, I obviously I love single family houses, though I've got a couple foreclosures that I had purchased in the past. Those I like though because again, there's always demand for single family houses, whether it is new construction houses or existing homes. Just because again, people I find right now over the last 5 years, like tenants have just they've almost accepted that it's going to take them longer to make the jump in home ownership.
Yeah.
So they want to be in a place that they're comfortable in, that they can grow their family in and be in something long term. So those single family houses, honestly, they do really, really well. And because there's not, often a big inventory on those, it's easy to re-rent them, but also like tenants are also willing to take rent increases on those. Like those sometimes we're doing $100 to $200 rent increases as the market increases. Where again a basement suite we may only be able to squeeze another $25 or $50 on them, right? Our main floor, same thing, 50 or 75. Whereas I find with those single family houses, you can find some that make sense on a cash flow basis. Those do really, really well. Where I've got a couple of them. I've had tenants there for five plus years, right? The same family, and they've been awesome. And again, I've been willing to keep the rents a little bit lower for them because they have been so good. But
Yeah.
I know if there was ever a turnover, there's the opportunity for me to push them probably another $200 or $300 a month, just because there's just such a demand for those single family houses.
It's funny. I had Alan on here not too long ago, and those are just like his two go-to property types. It's just single
Yep.
family homes
Yep.
and townhouses. Now, what are you noticing with like suited properties? What does that turnover look like?
Yeah, like the basements, like I mentioned to you, it depends if you've got a 1 bedroom or 2 bedroom. Like I said, those 1 bedrooms, I honestly see the turnover a little bit more of the 1 bedrooms because again, it fits as fits that tenant for a season in their life, right? Where again, they might be in school or that might be their first rental, right? They're just moving out
Yeah.
of mom and dad's house, and their first rental is a basement suite because that's the most affordable thing out there. Um, so again, we see the turnover probably every 1 to 2 years, I would say, with those 1 bedroom basement suites. 2 beds, you might get them to stay a little bit longer. Main floor suites generally still same thing. I'd say 2 to 3 years is pretty standard. And then again, they probably decide that they're going to start a family. So again, a young family wants their own space, a little bit more privacy. So they might opt to jump into a townhouse where they've got that privacy and it's a similar price point to a main floor when you factor in utilities and everything.
Yeah.
Or they make a jump to a single family house that they're looking to rent just for themselves, right?
Yeah. No, 100%. That makes sense. Now, I'm curious though, like, and this is off the top of your head, right?
Yep.
With all the, the properties that you guys manage, have you noticed maybe it could be whether it's a specific property type or a specific, maybe location specific, where you tend to get majority of the, call them problematic tenants, or you know what I mean, where you've had where you just find they a lot more management intensive as opposed
Yep.
to the others.
Yeah, I would say, I mean, when you're in the C and D areas, it's hit or miss, right? Because often, again, we've got lots of properties in those C and D areas, and we've had good success with some of these investors that's their goal is cash flow. So again, cheaper properties. Those types of tenants though that are in there, again, because they have a little bit lower income, that's kind of all they can afford, and they stay in those areas long term, right? So sometimes we do have really low turnover in those areas because again, they're a little bit more affordable. Tenants stay longer term. But on the other side of that, it's lower income. So sometimes you do have where it's not even necessarily sometimes the tenants, but then they're bringing, friends or family over. And those are the problems, right? Where you're dealing, with some of these smaller multifamily buildings where, have a little 6 or 8 or 12 suite or apartment that we're managing. And The unfortunate thing with that is, you get one bad tenant in that building, it can really turn a building upside down, because now you've got tenants that are unhappy. They're not going to be renewing their lease if they know it's coming up in 1 or 2 months, and then they might be shopping,
Yeah.
looking, in the background. You don't know about it, and then they just say, "Oh yeah, I'm not renewing the lease," right? You don't really know why, and then again, it often comes out at the end what was transpiring, or they just were uncomfortable sharing that with the landlord or the management company, whatever the case may be. So yeah, it is really important, kind of going back to that, understanding the areas and the challenges that come with those areas, and just really understanding the risk of the tenant profile based on the asset class that you're purchasing. And again, no one's perfect, and we're not. I'm not gonna say that we're perfect either. I mean, once in a
Yeah.
while there are just some tenants where you've done all the checks, but again, it might
Yeah.
just be something something went on, or again, just the way that they lived, they're just a little bit tougher to deal with. So again, I generally find, though, it is mostly in those C&D areas where it's really understanding, okay, how to manage these people, and managing expectations too, right? Where it's like, okay, you're gonna have to deal with, people leaving garbage out on the balconies and not taking care of some, taking care of things, or common areas, or pets running around, or they're just not good at picking up dog poop. Like, they just don't care as much. And again, that could happen in A class and B class area as well, right?
Yeah.
They're not protected from that, but it is fine generally. I would say that happens more frequently in the C&D area. So it's a little bit more management side of things, and making sure that you set the expectations early with the tenants, and have, open communication. So for us too, like when we come across those types of things, we're kind of on them to make sure that, okay, this can't happen, or if this continues to happen, we're going to be charging these things back to you, where we got a handyman that's got to come clean up dog poop, or whatever the case may be.
Yeah.
Or ultimately this could affect your renewal, right? So we let them know, hey, your renewal is coming up in 3 months or 4 months or 6 months, whatever it is. And just let them know, hey, like, this is kind of your probational period. We got to make sure that this is taken care of on the next 6 months. Otherwise, we can't offer you 1 year lease. It might only be another 3-month extension or something like that, just to see how things go, right? So
Yeah.
there are a lot of things that kind of go into understanding and managing tenants and expectations. So yeah, it's a interesting business to be in. You get tough skin being in this business now. I've been doing it since 2016, so almost 10 years. But I do enjoy it. I enjoy helping investors, and when we are, providing housing for people, right?
Yeah.
So it's very important. We need that, of course. But yeah, at the end of the day, it just really comes down to just managing expectations, taking care of people. And I mean, generally, most people are pretty good. If you're taking care of them, they're going to take care of you, pay rent on time, and take care of your property.
No, for sure, 100%. And you could just you could imagine with not just dealing with your own properties, but dealing with such a large portfolio, you would need to get those people skills, have a tough skin, not take things personally, know how to work with people, and like you said, manage expectations. Now, I'm curious, do you ever find in, like, call it the CND neighborhoods, where you find a great tenant when you're doing screening? It's like a fantastic tenant, and it proves to be so once they start renting, but you find that they leave not because of you as a landlord, but just because of the location, the surroundings, the fact they don't maybe consider themselves too safe there, or whatever the case may be. Does that happen often?
Yeah, yeah, and that's unfortunately the reality of those C&D areas, that often the good ones end up leaving, and it's not even necessarily just the jump into home ownership, where you do see that in the A and Bs. Like, those ones are actively, going to be making the jump to new home ownership. But yeah, it's often just now they're at a point where they just don't like the area, whether it is, homelessness they have to deal with, or just,
Yeah.
again, just the people that they're around and living with. It just maybe not great for their family life, or just their lifestyle either. It's just not something they want. So yeah, we do see that, where, it's fine for a certain season in their life, where again, they just wanted affordability for 1 or 2 years, but it's just a short term, and then they're on to something bigger and better potentially. But again, it is also dependent on where they're at their stage in life, right? If they're
Yeah.
younger professionals, yeah, at the beginning, if they're in school, whatever the case may be, they're lower income, they're willing to put up with a little bit of stuff at the beginning, but until they get a full-time job, or again, their financial situation changes, then I find those ones, ultimately just opt to go to a better neighborhood.
Yeah, no, 100%. No, I get that. And you know, the one thing I find as well, because you mentioned like the homelessness, one thing I find as well is, you know, you get your, you know, A, B, C, D neighborhoods, but you could have a neighborhood and literally just a block away, it's less than ideal to be renting, and then you're like 1 or 2 blocks up from that, and it's like perfect. You know what I mean? Like, for example, just off of a main road where there's a lot of undesirable foot traffic, you know,
Mm.
it just bleeds as far as they really willing to walk, kind of thing. So
Correct.
if you're just slightly out of that, you look and, you know, you see the pride of ownership, you know, everything looks fantastic. You just go a little bit down, and then you start seeing um, potential red flags on why good tenants may not ideally want to be staying there, right? Now, when you standing on a street, you know, what are you actually looking for? What, I mean, at this point in time, someone tells you an address, you know where that is, and you probably know exactly what the location's like. But, you know, what would you be looking for? What's going to tell you whether, you know, it's going to be a strong rental block or not?
I guess you also want, when you're walking down, you want to, like you said, pride of ownership. So walking down, are there a lot more, does it look like a lot more homeowners there where there's flowers and things like that, or gardens? Because often, again, we've got some tenants that like doing that, but I find a lot of tenants, again, if they don't own the property, they're not willing to, take the time and effort to do that. So yeah, and
Yeah,
make sure, grass is cut, there's not 3 foot weeds. You've got
yeah,
trees that aren't, properly pruned and things like that, or bushes that are out of control. Um, that's one thing you can see. But also, I mean, again, if you're near a park, are there, you know, are there kids playing in that park, right? Is that a community that people feel safe having their kids play in? Whereas if you go, in the evening, right after dinner, whatever the case, like, is that park empty or is it packed with a bunch of kids, right? That's kind of a good indicator to kind of give you an idea of how safe that neighborhood is. Um, but yeah, I mean, driving down, even you want to go during the day though, too. Like, is it quiet, or do you see all these cars on the streets, or again, are the people coming and going from buildings at all times because they're at home and they're not working, right? Like, that kind of
yeah,
tells you also if that's a lot more tenants, or also the tenant profile that are living in those neighborhoods as well, right? So there are a lot of things that come into play. And again, it's tough for, maybe an out of town investor to really understand that stuff. But again, this comes back to making sure that you're working with investor focused realtor to kind of help you navigate some of those challenges and just give
yeah.
them good sound advice on the benefits and benefits and some of the risks, obviously, with those neighborhoods.
100%. Yeah, yeah. Make sure your realtor's actually showing you not just what the property looks like inside if you're doing a virtual tour. They're actually taking you
Yep.
outside to show you what the you know the community looks like, what the neighboring homes look like, so that you get an
Yep.
idea for what it's going to be like for a tenant living there, and if you're going to attract a good tenant that's going to feel safe, that's going to feel at home and feel like this is a community they want to stay in.
Yep.
Now, I feel like people out there listening would probably be super disappointed if I bring on someone who manages a bunch of rentals and a bunch of properties, and we don't ask them, you know, what the hardest property it was that they ever managed. Like, if you could think back in your memory bank of like potential horror stories, anything that stands out to you, anything funny, anything, you know, any story worth sharing. You could
Um,
keep everything anonymous. You don't have to disclose any personal
yeah.
information, but yeah, anything that stands out to you.
Yeah, I mean, we haven't had, I mean, again, you're always going to have some, you know, funny characters you have to deal with tenants. I mean, again, I've seen enough of it now where, again, these cleanups, it's not a big deal, right? Some people are like, I'm sure some landlords, some investors walking through would be terrified when you see places. But for us, I mean,
Yeah.
it's almost second nature now when you go in. So again, I nothing really scares me. Everything can be fixed.
Oh, 100%.
So yeah, I don't really have any crazy stories though, to be honest. I would say the most difficult to manage though, I find can be the room rental situation.
Oh,
Part of
yeah.
the reason for that though is because it doesn't follow under the Residential Tenancy Act for room rentals, right? So yeah, trying to manage expectations and, 5 or 6 different households essentially under one roof becomes very difficult to manage. So yeah, we don't do room rentals anymore. We had a whole bunch in the past near McKernan and the university areas. Um, and that was kind of pre-COVID. And after COVID, that kind of went away just because of all the sharing quarters and things like that.
Yeah.
But I would say, yeah, that's one thing. But again, that can also be one of the most profitable. Like if you're willing to put the time and effort that goes into managing a good room rental, it can be very lucrative. Because we were getting, the bedrooms were getting between 7 to 850 a room in some of these houses. So, and again, these were all between 4 to 7 bedroom houses that we had in those areas. So I mean, the cash flow was very good. But again, that was a different market at the time, whereas the market now is a little bit different, I would say. And again, I'm not in the room rental market anymore, so we don't really help with that.
Yeah.
But yeah, like I said, if you as an investor are boots on the ground and willing to actively do that and do that type of work, good on you for doing it. And you might actually learn a lot throughout that process, and you might realize, it's maybe not worth the time and effort that goes into that. I'd rather just have a good long-term performing property where, again, I've got a tenant turnover every 1 or 2 or 3 years kind of thing, versus dealing with the room rentals. Because again, the double side of that is you got to deal with potentially some summer vacancies, right? If you are renting out to students, you might only have them for 8 or 10 months out of the year. So just something to consider.
Yeah, 100%. And the question to ask yourself is, how much is my time worth? Is it worth my time for having to be more management intensive? And for some people, it is. They'd rather spend their time managing this and get that extra cash flow coming in every month. And for some people, it's not. So I thinking of crazy stories. Like there was actually one crazy story that comes to mind. I took this out of province investor family to view some properties in Edmonton, and they wanted to see the good areas as well as the bad areas. So they had a couple that stood out to them, like, let's do this so you get an idea. And we ended up showing them this fourplex, and the one upstairs tenant opens the door, and I think he looked, and we have little kids, by the way. They have 2 younger kids. He looked like he was completely naked. I couldn't tell from the waist down, not that I even looked there because it was little bit overweight, but he answered the door with confidence and is like, come on in. And, the parents are quickly trying to cover their kids' faces. The next unit, there was people, and this one's unfortunate, just people just completely high out of their mind kind of thing, and just crazy. Yeah, so I was like, you could tell the neighborhood, but you could tell before going into the property, there's signs. Like if there are people passed out laying on the grass on the side of the road, that should be a sign. So there definitely are signs, but definitely seen some crazy stuff. Now, we've spoken about, you've touched on, when you initially got started, you started building on the systems, right? You obviously didn't have everything in place all at once.
Right.
What's one system that you've built, over time that others may call overkill, but it saves you in the long run?
Number one thing for us is preparing the tenants for their move out inspection. Like, be very clear on what your expectations are for cleanliness, making sure that the lawn is cut, all the keys are there ready to move out. Because again, this happens all the time where, oh yeah, my roommate has the keys to the garage remotes in their vehicle, and it's like, well, we need everything on site. As if not, we got to change the locks, right? Like we can't be waiting for you guys to bring back keys and things like that. So yeah, having a good system for your move out inspection, understanding what you expect from them on move out dates, times, and what needs to get done. Like we've got a checklist that gets sent out to the tenants along with, things that get missed. So furnace filters, making sure the lawn's cut, and then all the light bulbs are working. Like those are 3 very basic things. And then obviously having the keys there too, but those are very basic things that often a lot of tenants just overlook. And then again, they're mad at the end of the month when, those little things, we got to send somebody in there to fix them or take care of it, right? Whereas like, okay, I mean, you could have done it, but you didn't, right? So now we've got a system in place where we set the expectations here, but here's a checklist. Make sure that you guys do all this. If not, this is what we're going to have to do. We'll have to, send a handyman or the landscaper or whatever is going to get done and fixed, and then that gets deducted. So I'd say that's really important, having good open communication with the tenants and setting that expectation, because it just avoids a hassle for you too. Because if you got a tenant turned over coming in tomorrow, now you got to coordinate a carpet cleaner, you got to coordinate cleaners, the handyman, maybe a landscaper. Like there's a lot of things that need to get done in the next 24 hours before your tenant comes in, right? So, and then maybe if you have some concerns about the property, I mean, you may have been in there, let's say, like for us, we like to list our properties or reach out to the tenants about 45 to 60 days before their lease is up, so that we can kind of get an idea if they're planning on renewing or if they're not going to renew, and then we can relist the properties so we can start showings for that final month. But if you do have concerns, doing a pre-inspection maybe 2 weeks before they move out, just to see what the condition's like, and you kind of have a sense of, okay, I might need to have a painter lined up for when they're out. So,
Yeah.
talk to the handyman or that painter ahead of time so you can plan like, hey, I'm going to need you on the 30th at noon when the tenants are gone, because I expect I got to fix, some walls that need to be painted in there, or, you got to get your cleaners lined up, rather than trying to scramble. The tenant just moved out and it's like, oh goodness, I need a carpet cleaner and cleaner here, and I need a painter to do all this stuff by tomorrow, right? It's tough to coordinate that stuff. So, and there are some things where, again, generally tenants they understand, tenant just moved out yesterday. There might be some small things that need to be taken care of and that can be done in a later time. But I'd say the number one thing is just making sure it's clean and ready for the next set of tenants.
Yes.
That's the number one thing, so that, again, we can deal with, again, small repairs or things that need to be fixed the next day while they're moving stuff in, but making sure it's clean where tenants can put their beds and furniture on the floors and carpets or shampoo. That would be the number one thing. So, again, systems would be important, move-on inspections, and just clear communication on what you expect and what's required of them. It is really important.
Yeah, no, 100%. It's the case of being proactive versus being reactive. Because when you're proactive with it all, you prevent a ton of those issues, right? Because
Yep.
even with regards to the move out, you could have tenants with great intentions. They want to get their entire deposit back, but there's just that level of ambiguity on what they think is appropriate on the move out versus what your expectations are. So lining that up ahead of time so they know what your expectations are so that they can meet that, just helps everyone involved. I like the fact that you mentioned the potentially checking in ahead of time if you suspect that it's not going to be done, just to see so you can line up on the day, because
Yep.
that makes or breaks your experience, like on how stressful this all becomes. If you're proactive, you have things lined up ahead of time, there's no stress involved, everyone knows what needs to be done, you've already organized it, versus on the day you scrambling, you're trying to
Yep.
get things lined up, and it's just things are going crazy. So yeah, I love that. Now, what advice would you have to an investor who wants to grow fast but still stay in control of their time and energy? Because you've already, like what you've mentioned is like key for that. Is there anything else that you have for investors? They're looking to grow, they're looking to scale. They're not necessarily looking to go and be the handyman, be the plumber, do all of the repairs themselves. They want to do things as efficiently as possible. What advice do you have for them?
I would be, yeah, you obviously want to, I would say, find out what is taking the most time away from what you want to focus on, scaling. So again,
Yeah.
you want to be doing, things that are going to be pushing you forward and ultimately growing. So again, you might not be the one that needs to be doing like you said, the repairs or cleaning and things like that. But again, even showings, like there are, again, like our company, we offer placement services, right? So the most time
Yes.
consuming thing is, at the beginning is advertising and showings, right? Trying to get people through the door. And as you grow, you as one person cannot show. If you got 3, 4, 5, 8 units in a month that you're trying to actively show and get people through, and then, verifying and all that stuff, it becomes another full-time job essentially, and you're gone every evening, right? So trying to find systems or other companies that can help you with outsourcing some things, especially for the tenant placement portion, because again, that's one thing that takes a lot of time, but it's also very important that you get a good tenant there, because then ultimately, again, you can self-manage it going forward. If you got a good tenant in there, you can self-manage it and deal with the things going forward potentially. Yeah, that would be my 2 cents.
That's it, man. Like
Yeah.
when it sounded like you were gonna go on there, and I'm like, what else can you add? Like that's
Yeah.
just the perfect answer, because that's
Yeah.
it. It's having control of your time, using your time for the highest and best use, what's gonna move the
That's right.
needle forward for you, and not focusing on all the other minor stuff that someone else can do, that you can offload, that doesn't require your unique skill set, right? Like someone
That's
else
right.
can do it, and they could probably do it just as well, if not in some cases better. So
Mhm.
yeah, I fully agree with that. That was
And a lot of landlords, I mean, they're scared to hand that stuff over to another, a management company or maybe someone else to do that stuff. But ultimately, at the end, you as a landlord, I mean, you're still gonna have control, and you'll have a say in that tenant. Like, I mean, we're not signing a lease without you understanding. But again, it saves you time from, again, advertising, wasting time with all these no shows or people that again, aren't qualified that are coming through, and you're just wasting your time, right? Whereas you could have been doing other things, whether it is spending time with family or trying to grow the real estate portfolio, right?
100%, 100%. And I think that they just highlights it because you've probably heard this before as a property manager. People who are pro self-managing would say, yeah, you're either managing the tenant or you're managing the property manager. But there are key things. Property managers work hard, and there are key things that can take up a ton of your time if you're doing this yourself versus
And
outsourcing.
I'm not against self-management at all. I
Yeah,
mean, again, that's how I started. I mean, I manage my own properties, of course, but there's lots of investors that, again, for years have just used this just for the placement, and they're okay with dealing with
yeah,
the day-to-day and coordinating, a few small repairs and collecting the rents kind of thing. But I also think it's also important for owners to understand that, what goes into the day-to-days, getting those late phone calls or
yeah,
managing tenant expectations. Like there's a whole bunch of things in managing disputes between tenants, how to mitigate and how to deal with those things. So there's a lot of things that you learn going through and being in the trenches. And again, at a certain point, and that's kind of why we started that tenant placement service, whatever, 5 or 6 years ago it was just to establish a relationship with these owners, because as they grow, our goal is hopefully that they come on board with us and transfer the portfolio over to us, and as they can continue to grow, of course. But there are tons of landlords that just use us strictly just for the placements or strictly for a move out inspection. Like they just want kind of a la carte services, because
yeah.
again, they're willing to put the work in during the year, but they just need help at the beginning. So, and there's definitely ways to help improve your systems so that you can actively grow, because again, at a certain point, it's not feasible for you to be doing absolutely everything in the business, right? From showings and advertising, doing the bookkeeping, doing the repairs and cleaning. Like at a certain, you got 1-2 units, yeah, you can do that. Again, you might have a little bit of work where, again, you're spending evenings and weekends away from family just to get this ready for a week or two. Like that's reasonable, and it's feasible sometimes for people. But yeah, it's not when you are upwards of 10+ units kind of thing, right? It might
No,
be a lot more difficult to do that. So you need to find out at what point you just need to say, okay, I need to outsource this so I can get some of my time back and really, really focus on growing. And,
100%.
and
Yeah,
it's a hard thing. It's a hard thing to give up, but I find, yeah, until you're willing to make that jump, and again, there's going to be some costs involved, but then you can really, really scale once you've got your systems in place, and it's just easy to onboard and just add that. And it's like, okay, yeah, I've got, they're going to help with this. I got this person help with this. So it's a lot less tedious when you've got the systems in place, and you can just essentially bring units on because you've got all the systems ready to go. Similar to us, like when we started out, everything was so manually intensive, right? Like we had to do everything, whereas now we've got a good system in place where, again, all repairs and maintenance tickets are created online, rent payments are automatic. That's another thing that I recommend to landlords if you want to get on some sort of pre-authorized debit or some sort of system to help with that, because yeah, as you grow, you want to be chasing tenants for e-transfers
yeah.
every month, right? Whereas again, 1 or 2 is fine, but once you get between 8 to 10, 12, 15 e-transfers a month, it becomes quite tedious, and then you're chasing tenants because like, oh, I probably forgot about this one tenant and I got 13 or 14 of them, but I got to chase this other guy down, right? So
100%. 100%. Well, very well said. Because, yes, when you have one property, you're just getting into it, it might not seem like the logical step to completely outsource it. You have a little bit more time. But as you start scaling it up, it becomes a bottleneck for you, and time becomes,
Well,
your scarcest resource versus, trying to save as much money as you can. Then you kind of you get to that inevitable point if you want to scale past that, where it's like it just makes sense. But I do think, again, lowest hanging fruit is again, especially for out of province investors who aren't boots on the ground,
yeah.
is at least using services from a good property manager who offers that unique a la carte service to just that initial upfront, and again, the exit as well, with regards to the inspections and stuff, just those real time intensive portions just to do it there. And then, like you mentioned, it's also property dependent, location, tenant profile dependent. It could be a breeze, or it could be real management intensive. No, there's a ton that you mentioned there. Now, Garnet, I wanna transition into our rapid fire round of questions. Okay, so just answer the first thing that comes to mind. Let's have fun with it. Okay, for most brand new investors, what are 3 rookie mistakes they're likely to make, and how do they avoid them?
Number one would be if you're buying an existing, let's say a suited house, understanding what type of lease is in place. Is it a periodic lease or is it a fixed term lease? So
Yes.
really
Yes.
understanding what the what they can and cannot do. Right? We see this all the time where tenants or landlords think, oh yeah, I'm buying this property, like I'll just kick them out and renovate in 90 days. But so the way it works in Alberta, you can't give a 90-day notice just because you want to renovate. So technically in the
100%.
RTA, it says 365 days notice for renovations. And again, for renovations, they don't say painting, flooring, kitchens. Like that's not considered renovations. It's gotta be large scale where it's like maybe a building envelope, you got to do windows, something like that to that scale. Or, in a case where let's say there was a flood or something like that, like that's a bigger renovation that's required. That might be a gray area where you could argue it. But yeah, trying to do just new flooring and paint and updating the suite, that's not considered renovation. So you can't just can't just kick them out in 90 days. It's got to be 365 days for that stuff.
Yeah.
And then caps and leases, so maximum for utilities, that's really important to look at. Like if you're if you're acquiring a property, really understanding, okay, well, what are you responsible for? So if the lease just says $1,500 a month is what you're getting for the basement suite, but there's no cap on that lease, well, what happens when there's $1,000 utility bill for power, water, and gas? Who's going to pay for that, right? Like technically the tenants are already paying a fixed amount and the main floor tenants are paying a fixed amount. So you, the landlord, are bearing that risk, right? So understanding that. So you want to make sure that if you are signing up for that, you understand that, or that might be an opportunity where when you take over, you've got to adjust that lease or issue a notice to adjust for those. So generally for us, our suited houses, we like to see between $300 to $400 on the main floors is what's written in there, and then for the basement suites are between $200 to $250 a month. So you should be in that $500 to $600 range, somewhere in there as a cap. And then the way we have it written in there, the main floor suite will be responsible for 2/3 of that overage. So if it's over $600, let's say it's $700, that $100 overage is going to be split 2/3 for upstairs and then 1/3 for the basement. So that's
Downstairs, yeah.
really important because I see that pretty frequently where landlords didn't write that into the lease, and then now they're kind of hooped. Because that wasn't done, right? And now they're coming to us because they need help with, either eviction services or they just need help with managing that. But the tenants, they just don't know where to go. So unfortunately, that's sometimes something that gets missed. So that's important to make sure that's written into your leases, those caps. And then again, making sure that you've just got really good, clear expectations on who's responsible for lawn and snow maintenance. Common areas, again, is the backyard shared or is anything written in there about that, and understand that, because again, now you just want to avoid where tenants are fighting amongst each other. Now you're getting stuck in the middle trying to deal with that, right?
Yes. 100%. Oh man, those are fire. Those are crucial. And putting those in place will make your experience a whole lot better, right? Again, it's being proactive. It's setting those expectations ahead of time, and it avoids disputes.
I think that understanding the lease is one of the most important things, especially when, again, first single family house, it's important, of course, but it's most important when you're dealing with multifamily buildings where you're taking over 8, 10, 20 leases. Now you really need to understand, okay, when was the last rent increase? Because you can't issue a rent increase within a one year's
1 year period, yeah.
of a recent increase.
Yeah.
And again, you've got to give 90 days notice on those periodic tenancies, right? So you just really got to understand what you're inheriting when you purchase that building, and then when you're able to push those rents, and how are you going to go with that?
100%. Okay, so quick question, and this would then I'm actually building this off of your first tip there. If you had to choose fixed lease, month to month, or periodic?
Fixed every single time.
100%. Yeah.
Yep.
Yeah.
And the reason for that is in Alberta, I mean, we're under no obligation to renew. So when that term is up, the tenant don't get to stay, right? Whereas with a month to month on a periodic tenancy, as long as the tenants are paying rent, I mean, of course you can increase the rent, but if they continue to pay the rent, they get to stay, is how it works, right? So, I mean, the nice thing with a fixed term lease, the landlord is under no obligation to renew. So even for us, if some tenants say, "Oh, I'm going to be buying a house," hey, Elray, and I'm going to be buying a house in the next couple months. I want to help you. We want to find a place. We just want to go month to month because we want that flexibility to get out. Well, for us, we congratulate them, and also we're willing to work with them a little bit. But usually, what we'll do is we'll do a 1 month or 2 month lease extension, and oftentimes tenants say that, but things don't line up perfectly, or they can't qualify, whatever the case may be, or can't find the right place. But what we don't want is tenants being on a month and they give notice in the middle of November or December or January, right? Now the landlord's scrambling. We're trying to find a tenant in the winter months, which is possible. But again, the rents market's different then. There's a lot more inventory often in winter months, and the rents would generally be a little bit less, right? So it is just tougher to fill those vacancies in a bad time of year. So we would much rather do a lease extension where it ends, whatever, to get, if let's say in the springtime they want to go month to month, well, we'll do an extension till the end of summer, maybe till the end of August, or even shorter than that. But we don't really want things creeping into November, December, January. Again, it's month to month and they can leave at any point, right? So I'd rather just do a fixed term lease and do those shorter terms. And that way, again, if they're not willing to commit longer term at the end of summer, then at that point you just tell the tenants, okay, that we can't renew. We've got to we're looking for a long-term tenant for a year's lease. So basically, at the end of that term, the tenants have to be out.
Yeah, no, that makes sense. So I have one last rapid fire question for you. What's the first system you'd rebuild if you had to start completely from scratch?
That's a good question. I would say streamlining how your communication is with tenants. Like we've got the system now where everything, the maintenance ticket, like what you don't really want to get into, your tenants are calling you, again, by scale, but where they're calling you for every little thing, right? Like it's best to have a paper trail. So again, if there are ever any issues in the future, whether it is, let's say a flood or insurance or something like that, right? Like you've got a paper trail saying, okay, the tenant emailed them this time, or they contacted us. I followed up. Or again, if they do call you because there's an emergency, at least follow up with an email saying, hey, we've sent out the plumber or whatever, something like that to that effect, so that you've got a paper trail for something like that. That would be very important. And again, you also it's nice to have that where you've got the system. So again, you're not taking those phone calls after hours when tenants are home or anything. Maybe they know that they have to send an email to you or create this maintenance ticket through your platform, so that it's not even, so at least you can log it. It's tracked, but again, it also avoids from you having to take all these phone calls from all your tenants. That would be one thing. And then, just streamlining your rent collection process and how you're doing that.
Oh man, that is fire. That's gold for everyone listening out there. Yeah, set the expectation on communication and have a paper trail. Garnet knows what he's speaking about. If things go south or things go sideways, you want to have a paper trail and not just recollection of phone calls.
That's right.
Garnet, this has been so much fun, man. Now, for the listeners out there listening online, maybe they're even driving, where's the best place to follow along on what you're doing, potentially even touch base and reach out to you if they wanted to use your services?
You could just Google us. So or go to our website, just agpropertyservices.ca. All of our info is on there, and you can feel free to call us anytime if you want to chat about the Edmonton market or have questions about a deal that you're currently looking at. For sure, give us a call and we can definitely help with that.
Now, for everyone listening out there, of course, everyone that I bring onto the show, they have to be investors themselves and not just work with investors. So we know that Garnet's an investor himself, but I'll take it one step further. And Garnet obviously didn't ask me to do this, but I actually personally, for my investors that I'm helping with, I personally refer them to him. Now, I'm smart about what I do because I'm a relationships guy, and the last thing you want to do is just be bugging someone constantly and not adding value at all. So I warn my investors is we're not going to bug Garnet until we get to the point where we're doing our due diligence. We can't ask him for every single property. He'll just start ignoring our phone calls. But that being said, though, he knows Edmonton really well. So if you invest in Edmonton and, you have questions or insights with regards to neighborhoods, property management, using some of his services, feel free to reach out to him. He is very well versed and very good at what he does. But Garnet, I want to thank you so much for coming on and sharing, man.
Yeah, appreciate you having me on. This was a blast.
To our listeners out there, if you're looking for more valuable insights, be sure to subscribe Share this with someone who can benefit, and as always, keep investing smartly. Thank you for tuning in to the Wealth Through Real Estate show. If you want to learn how distressed properties can turn into high-performing rental assets, then you don't want to miss my episode with Jonathan Bean. This is your host, Alray Noble, signing off.